Are you earning really great revenue, but no matter what, you still feel a little broke as a business owner? Like your cash flow and your bottom line, they're not improving like they really should. And so no matter what you do and no matter how much you earn, money sometimes still feel few and far between. Well, if so, let me tell you why. That is because of your margins. Now, I'm specifically referring to your gross profit margin and your net profit margin. Let's discuss the difference between the two and how you can improve them so that you smile when you log into your bank account and you look at your net profit. Welcome to the Say Yes to Profits podcast. Here's where you will learn how to manage and master your finances so that you smile when you log into your bank account. Say Yes to Profits is a full-service accounting, tax, and CFO firm. Our mission is to stop entrepreneur failure and create profitable CEOs. Tune in each week for new financial, business, and tax strategies. Listen, it is past time for you to say yes to profits. So let's jump in to this week's episode. Now, when you think about your gross profit margin and your net profit margin, there are a few components that make up these numbers that if you improve those individual components while you're earning revenue, then your cash flow and your profit will improve as well. Now, before we get into those components, the first thing that you need to know, your gross profit and your gross profit margin will show you the exact amount that you are making on every dollar that you earn. So what is that telling us? That's basically telling us that no matter how much you brought into your business, what is left over after something you're going to learn in just a second is the exact amount that you've earned on that dollar. So a lot of business owners will earn whatever the amount is, $1 million, $2 million, $5 million, 500,000, 200,000, whatever the amount is, and they're celebrating the revenue number, but yet it doesn't then transfer to their cash flow and their bottom line. Okay, so that's your gross profit. Your net profit is what is left over after you've subtracted all of your expenses. That is going to give you your net profit. Now that you're clear on your gross profit margin and your net profit margin, or your gross profit and your net profit, let's look at the components that make up these two. So the very first component, and the one that you have no issue with, is your revenue, right? Again, most business owners, they know how to bring in the money, right? Ching, ching, ching. That is not an issue. The keeping the money, the saying yes to profits, is the issue, all right? So the first component is your revenue. The next component is your COGS. Now, these are your direct costs. These are your out-of-pocket costs. Most times when you secure a new client or new customer or buy new products, your COGS will increase, hence a problem. But these are your direct costs, the second component. Now, once you have your revenue and your COGS, then you will have your gross profit, okay? Once you have your gross profit, you move to the next component. The next component are your expenses. Now, these are your everyday expenses. No matter if you have one client, 1,000 clients, you're going to have these everyday operating expenses, okay? The final component will be your net profit. Now, what is this? When you're looking at this, this is what? An income statement, right? Yes, because this is where you're going to pull your gross profit margin and your net profit margin. Now that you have these components, now we can factor in the formula, right? And so the formula for gross profit will be these two components here. Those are what you're going to use. And so the formula will be revenue minus COGS divided by revenue. That is going to give you your gross profit margin. Your net profit margin will consist of these components down here. That's why this works. And so you'll take your net profit divided by your revenue, and then you're going to multiply that by 100%. That is going to give you your net profit margin. So, for example, let's say that for the year, right, your company earned 1 million in revenue. And your COGS for that year was 500,000. Off top, your GP, your gross profit is going to be 500,000. Okay. Now we go to the next component, which are your everyday operating expenses. Okay. And so let's say your everyday operating expenses for the purpose of this example came out to be 300,000 for the year. Right? That means your net profit is going to end up being 200,000. Now with these numbers, let's determine your gross profit margin and your net profit margin. So using the formula, remember the formula, let me bring this back over real quick. This is the formula for your gross profit margin. So we're going to use that over here. So for this particular example, when you think about your gross profit margin, GPM, we would take 1 million minus 500,000 divided by 1 million. That means your gross profit margin is going to be 50%, right? Revenue minus COGS divided by revenue. Write that formula down, all right? Now let's determine your net profit margin. So your net profit margin, you're going to take 200,000 divided by 1 million multiplied by 100%. That's going to give you a net profit margin of 20%. Okay. And so now, based on this example, we have your net profit margin and your gross profit margin. Here's the thing. If you are a service professional, we work with a lot of service professionals, right? Private practice owners, attorneys, consultants, and general service professionals. If I am your CFO in our on-demand CFO services, we're always looking at your margins because your margins will identify, is your financial house in order? Meaning, you have the ultimate financial visibility into every dollar that is entering and leaving your business. And so you have financial clarity, control, and you're operating from a place of financial confidence. If you're unable to say yes to this, you need financial strategies, systems, support, and solutions. And the only way to get that is to hire a virtual CFO. Well, I want to introduce you to my company, Say Yes to Profits. We will help you manage and master your finances so that you eliminate all cash flow problems, gain the ultimate financial visibility, and say yes to profits. Listen, I want you to click below and schedule your discovery session with me today. There's a reason why we have a 95% success track record. Click below and schedule your discovery session with me today. I look forward to speaking with you soon. Say yes to profits. If you're leaving money on the table, if your services are not priced for profit, if you're spending too much money on certain things, like your margins are going to identify that. We get really granular in looking at your margins. I'm giving you a high level overview for the gross and the net, but you can look at your margins by each service line, each expense line, each department, each category, so on and so forth, right? So anyway, so if you are a service professional and I'm your virtual CFO and we're looking at your numbers, right? And I see that your gross profit margin was 50% for the year, for the month. I am going to say, as a service professional, that is too low. Okay? Because here's what this is telling me. You, no matter what you earn, for this example, 1 million, half of that went to your cost of goods and services sold. So no matter what you bring in, based on this numbers, based on this financial historical pattern, we know that half of that is going to go to your direct cost. And so really and truly, yeah, you may have crossed the $1 million mark, or you're on your second million or your first 100,000, whatever it is for you. Half of that is going to the direct cost. That means you only have half left for the everyday operating expenses. Again, in my opinion, that is too low. And so I would want, as a service professional, for your gross profit margin to be 60, 65% or higher. You want to achieve 50 at a minimum. That's the floor number. I need you to get it up, up, and up. So as a service professional, 65% or higher is the goal. And so either your services are not priced for profit, You're not selling enough. You're leaving money on the table here. Maybe you haven't diversified your revenue streams, like something is going on in your revenue, or you're spending too much money on your cost of goods, because your GPM should be 65% or higher. Okay. Now, once we get to your net profit margin, 20%, again, that is your floor number as a service professional. That is the minimum you should reach. I want your net profit margin to be 40% or higher. So you need to get it up. So what is that telling us? That is telling us, going back to before, either you are spending too much money on your everyday operating expenses. Now, here's the thing about your operating expenses. Most times they're fixed, okay? Most times they're going to be what they're going to be, and there's not going to be a lot of changes to it, but you absolutely can change them. All right. And so I need you to contact your vendors and negotiate a new contract, or look for different vendors, or look for different places that, you can spend for utilities or something, because something needs to change. And either that change is going to be in selling more, that change is going to be in lowering your costs, that change is going to be in managing your money correctly. All right. So the way to improve your margins, you all, you either need to increase your price, and don't worry about my chicken scratch. Get the message here. You either need to sell more. Okay. You either need to lower your expenses. And your expenses is going to be either in your COGS or your OPEX expenses. All right. So you either need to increase your price, sell more, maybe you need to diversify your revenue. You need to figure out ways to lower your expenses. I want you to start operating on a lean budget. We are not keeping up with the Joneses as a business owner. We're being profitable. We're building a truly profitable business so that we can build wealth, so that we can leave a legacy, so that we don't have to worry and stress about the money and where it's coming from and where it's going, so that you as the owner can receive a salary consistently from your business. Here is how you improve your margins. But you have to get clear on your gross profit margin, your net profit margin, and what is making them up, so that you can improve them. Okay. So again, if you have any questions or comments, definitely leave those below. Don't forget to like this video. Don't forget to subscribe to our YouTube channel. And of course, this is Octavia Conner. And until we speak, say yes to profits. Toodles. Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now see you on the next episode. Say yes to profits. Toodles.